Are premium bonds a good investment in 2021? Let's find out, as I invested £32,500 during November and December 2019. That's how much I have earned as of April 2021 compared to what I would have earned had I invested in a 3-year fixed bond at the time, which was yielding about 1.5%. Let's log in and find out. So now we're logged in and let's see what I've won. Page 1 of 2. So let's go to page 2. So these are all of the winnings as of January 2020. Here we've got, and here we have more. So let's put them all into a table and work out how profitable they are or not. There we go, there's all the winnings, totaling £350 since January 2020. And here's the interest I would have earned in a 3-year fixed rate bond, which would have been £650 by April 2021. And here's the difference. And originally the interest rate on the premium bonds was 1.4%. Then they cut it in December last year to 1%, peanuts. And here we have the average interest rate overall for the premium bonds. So this is the graph that shows you whether premium bonds are a good investment or not compared to a fixed rate savings bond. And here's the interest rate curve, well, straight line to 650 at about a 1.5% 3-year fixed rate bond. And here's what the premium bonds accumulated winnings are. Last win was January 2021. So for February, March, April, no wins, 3 full months flatlining, and thus the gap between interest rates and the bonds has widened. Basically I was trundling along around minus 100 to minus 180 until December, around minus 150, and then suddenly it fell off a cliff. Why? Because they cut the interest rate to 1%. With my slightly below average look, that means there's a huge widening gap. So I'm basically I've sacrificed half the interest I would have earned on a fixed rate bond, basically giving it to the government for a chance to win big. And so far I've won nothing big. And the gap is huge and widening. So in 2021, are premium bonds a good investment or not? Well, since they cut the interest rate to 1%, premium bonds are a garbage investment. The prize pool is so small that your chances of winning anything have completely collapsed. Well, this is on a downward curve. I know you're going to say, but the interest rates on the savings accounts are garbage, which is true. You're going to be looking to get a fixed rate bond that pays 1% now. I could go looking, try and find a best fixed rate account. Let's have a look. Let's bring up this page. Here we go. What's the best fixed rate bond now? Using this Moneyfacts website. 5-year, 0.6, that's garbage. I wouldn't invest for 0.75 for 5 years. 2-year, 0.6%, still garbage. Cash ISA. Yep, they're garbage. Oh, there we go. 7 years. Oh, there we go. 1%. 5 years. You can get 1% 5 years. That is a long time to invest for 1%. So yes, the interest rates are garbage right now. 2-year, 0.5%. Oh. So what do you do? Well, you do what I've been telling you to do for years, since 10 years, invest in tech stocks. Yes, it's higher risk, but is it higher risk? Because you're losing money. Remember, real inflation rate is around 3.5% in the UK, 3.5 to 5.5. depending on what you're buying. So you're losing money anyway by investing in savings accounts or premium bonds. They're all basically garbage right now. Savings accounts, premium bonds are garbage. I've earned £25 since this year. Since the start of this year in 4 months. £25. That is garbage. You know, £25 is garbage. There's no point in having savings accounts. There is no point in having. So, answering the question, are premium bonds a good investment in 2021? The answer is no, they are a pile of poop, garbage, rubbish. But so are all of the savings bonds. You're being forced to hand over your hard-earned money to the government in loss of purchasing power as they print money. Look, because of the virus, and they were doing it before the virus. The virus is just accelerated the money, giving people money to sit at home. They printed, overall they printed around £600 billion since the pandemic started. 600 billion. You think there's not a price to pay? Well, that's the price to pay for it. Loss of purchasing power. And this is a garbage interest rate, 1.5%. That's sub-inflation. Inflation is 3.5% to 5.5%. So I was losing money anyway, even if I bought a 1.5% fixed rate bond. You know, you need something like a 4% fixed rate bond after tax to keep up with inflation. Instead, the best bonds are 1% right now. Garbage. Do what I've been saying. You invest in safe AI tech stocks, a basket. You know what they are. Anyway, I'll give you a list. There's the list. What I've invested in. And I'm going to look at... the trouble is I've got so much cash sat on the sidelines. And I have piled a lot of money into tech stocks. But the fact that they've gone up in price, my portfolio's weighting's gone up. So it demands less investment. If the portfolio doubles in value compared to what I invested in March 2020, when I was telling people this is a buying opportunity of maybe not a lifetime, but for many years, piling. So I piled in and my patrons piled in. So if you want to, you know, when I first access to all of my analysis and trend forecast, then do consider becoming a patron by supporting my work with just $3 per month. Because if you'd piled in March, you would have more than doubled your money on most of the stocks in my core AI portfolio. And my newest analysis will be on high risk AI stocks to invest in, how to invest in high risk stocks, because there is a different way to invest in high risk stocks. They give you far higher return for a far higher risk. That's why you have a basket and your exposure be small. But now I'm being sidetracked from the garbage that are premium bonds. I would not invest in premium bonds in 2021. In fact, if I wasn't overflowing with cash, I would be liquidating. I will liquidate this and the other savings at the earliest opportunity. I'm going to reduce the amount I keep in cash. I'm going to have to bite the bullet and buy AI stocks at a premium. They are currently selling at a premium, most of them. TSM recently fell to around 108, which wasn't so bad. And AMD recently fell, yeah, but they're coming back up a bit. Maybe if they have another tumble, maybe I'll invest in, well, I probably will. I am going to invest in high risk AI stocks because the main ones are, so they're not overpriced, but they're fairly valued. So if you follow my analysis, you'll know that I don't just track the stock price, I track the valuation, which is critical in knowing when you're in a bubble and when you're not. All these fools out there, oh, bubble, they don't have a clue. I've been doing this since 1986. I've been investing in stocks tonight. I know when there's bubbles and when there's not. And AI stocks, the giants, are not in a bubble. Some are overpriced, yeah. Amazon, well, it was, it's come down now, it's given its bonanza in earnings. But you know, that's where you have to be, because the savings, you're going to lose your money. You have to take some risk, because this is 100% guaranteed loss of around 4% per year in the value of your hard-earned savings. 4% a year, that is 50%. You lose half the value of your savings in 10 years. Whereas if you invested in AI stocks, are you going to lose half your value of your money? No, it's going to be multiples, many multiples, as my long-term forecast for AI stocks suggests. There's a no-brainer. It's going to be many multiples of the current value in 10 years' time, even if there's a crash between now and then, which is probable. Because markets, they do tend to oscillate between euphoria and depressions, peaks and troughs. They are oscillations, but if you get the valuations right, then you have buying opportunities of a lifetime. Well, for many years, as was March 2020, that was a buying opportunity, best buying opportunity for at least 3-4 years, 3 years at least. So why I piled in all available cash into AI stocks at that time. Should I have sold the premium bonds? Well, it was a bit early because I'd only just invested in them. Well, at that time, I was still fantasizing about getting an email or a letter or a phone call saying, "Mr. Waliat, you have won £1 million, or at least £5,000. I was still stuck in the fantasy stage during, March here. I've not had any wins. I thought, this time, April, I'm going to get the call. April came, went, and it's garbage since. So no, premium bonds are not a good investment in 21. And none of any of the savings accounts, they are a right rip-off. All of the savings accounts, 1% for 5 years. What are you on? 1% for 5 years. What the hell? That is garbage. That's the best rate. There's worse. There's worse than 7 years for 1%. No. 7 years for 1.1%. 5 years, 1%. There's garbage. Just go and invest in safe AI stocks and forget about it for 10 years and come back in 10 years time and you'll see there'll be many multiples, whereas your savings accounts will be virtually where you put them started with, and then when you go and try and buy something, you find out they've lost half the value. That's all the central banks can do is print money. They don't know anything else. Exponential. It's one of the mega trends which I've been writing about for a good 15 years. The inflation mega trend, courtesy of central bank and government money printing. Central banks today call it quantitative easing. It has different names over different time periods. And the governments call their money printing debt or government bonds. That's just another name for money printing. Governments, they print the bonds and then they inflate their values away. Then now they get the central bank to buy the bonds so they can deflate the interest rate. But it's a big con. You know why it's a big con? Because the central bank is buying the bonds. The government prints the bonds, the central bank buys the bonds, the government pays interest on the bonds. It pays interest to the Bank of England who owns the bonds, and then the Bank of England does some sleight of hand and passes most of it back to the bank, to the government. What a con. That's government debt, fake government bonds. What is money printing? Because they're not paying any interest on it, because they're getting the interest back. So it's basically a con. Yeah, you'd have to be a fool to invest in bonds, in savings accounts, in premium bonds. You'd have to be a fool. Yeah, I'm foolish. I've got 32,500 parked in this pile of poop. I need to pile. I need to buy more different assets, probably another property. I'm going to look into more property, but that's leverage to the inflation megatrend as well, so they're not going to get any cheap properties out there. It's all leverage to the money printing, stocks, housing. It's all going up because they're printing money, exponential printing of money. 600 billion they printed in 1 year. That is epic. They used to talk about the financial crisis. I think the UK government, the most it printed in 1 year was around 180 billion. This is 3 times bigger money print, more than 3 times. It's like each crisis, the amount of money printed to deal with each crisis gets exponentially larger. And you know what the next crisis they're trundling along is climate change. What's the money printing to that going to be? 3 times? Well, we're talking in the trillions of pounds. Maybe 2 trillion they're going to print to try and cope with climate change. Maybe move the capital from London to Birmingham. That's going to be the mass great project, to relocate the capital to higher ground because of climate change. It's probable. You can never know. Sheffield. In fact, I did a video. Well, I don't know if I converted the article into video. That they could create a new mega city between Sheffield, Manchester, and Leeds. There's this land in the middle that's unpopulated, and in that space, a new mega city the size of Manchester could emerge. Because it's in the centre, it will have direct transport routes to the other major urban areas such as Manchester, Sheffield, and Leeds. So if you want to buy land, that would be a good space to buy in the middle of that triangle. You know, given climate change, that could become very valuable land. I'm going to look into buying some parcels of land in there. Trouble is they're going to scam you. You can't buy farmland. There'll be clauses that if it's ever developed, you don't get any of the money. It goes to whoever owned it before the government. They're going to get scammed anyway. Maybe it's probably best to buy some property in that triangle. Yeah, I'm going to look into that. So the area between Sheffield, Manchester, and Leeds, in that triangle in the middle of it, there will be a major city there. It might take a while, but as climate change comes in, they'll be looking for areas such as that in the centre that are unpopulated, cheap land that they can create a new city, just like they did Milton Keynes 50 odd years ago. That's where it's going to be a major city because there's plenty of space there for a city, sparsely populated farmland. That's the place to invest. There's many other such triangles. Look for triangles such as that, where they can buy up land cheap and build cities. Yeah, that's what I'm going to look into. I won't say advice because it's speculative. Obviously there's a risk, but land values go up, property values go up, so it's a low risk to me, especially given that savings accounts are garbage, premium bonds are garbage. My throat's going, so I'm going to have to end this video, but do subscribe and remember to consider becoming a patron by supporting my work for just $3 per month. $3. What am I doing? $3 per month Patreon for first access to all of my analysis and trend forecasts.